Hey everybody, it's Shannon from alphatrends.net. Today is Friday, the 10th of February, 2023, and the markets pulled back a little bit further here this week. It was not unexpected. Those lines that you see on the daily chart, I drew in last week and I've kept them on the chart. We are below declining 5-day moving average here on the right, which tells us intermediate term, we're guilty till proven innocent. I think we're going to need to get back above 410 or so just to become neutral in the intermediate term. We did close below the anchored volume weighted average price from that all-time high here as well. So we're back below that just one day so far, but it was important that maybe it hold as support. It failed there. I'm going to talk about a lot of stocks that looked like they were going to hold up this week, but in fact did fail. So if you're watching this on YouTube, please subscribe, like the channel, like the video, all that stuff. And the NASDAQ was down today as well as, of course, for the week. This is the key level we've identified, this horizontal line that we broke out of last week. And this week we pulled back. We pulled back on lighter volume, so that's somewhat of a positive. But the place where we found the sellers was exactly the place we've been talking about for the last several months, or several weeks rather, and that is the anchored volume weighted average price from this high right here and that orange anchored volume weighted average price from the COVID low. So selling was expected in there, and it did in fact turn out to be supply. Now that we've broken this 304 level, we're going to need to get back above 304 just to look at this market as neutral in the intermediate term. Otherwise, it wouldn't surprise me at all if we see some further selling into next week, that maybe we see a little bit of activity like this, try to recover, and then down to the year-to-date anchored volume weighted average price. For the SPY, let's go back to that for a moment. The year-to-date anchored volume weighted average price is currently at about 400. So on the daily time frame, we have a rising 20 and 50-day moving average. The 200-day moving average will start to flatten out next week. So we still have just a lot of mixed messages from the market overall, and the action in the individual stocks is also quite different depending on what stock you're looking at. Meta made it right up to that anchored volume weighted average price from the all-time high. We spoke about that last week, and look at where the exact high was. Not a coincidence, down 10% from that point. So, some of the names that I was looking at as potential longs this week, and I call them potential longs because we don't buy them when we're in pullback mode. So Applied Materials, for instance, beautiful inverted head and shoulders pattern, broke out on big volume right here. It's pulling back, but it's still pulling back on light volume, and we're below a declining 5-day moving average. So it tells me it's not ready to go yet. We need some time before it's ready to heal, or before it can heal and then move higher again. APH is another one. I was looking for this stock to break out. It gapped up. I don't chase gaps. I tell people don't chase the gap, wait for VWAP. That's written about in my new book, which is out on Amazon. If you're unable to find it on Amazon, sometimes, actually, in fact, every single day, thank you, it has sold out, and Amazon is having a difficult time keeping inventory in stock. But it's also available on Google Play Books if you want an ebook of that. Anyways, don't chase the gap. Wait for it to get back above VWAP, and the stock failed instead. BAND was one that I was looking at as a potential long. I tweeted about it, said I wasn't buying it yet, and that one, broke down. There was no reason to buy it, after, since it started breaking down. It was a watch list idea. BSY was a watch list idea because it's got a nice looking longer term chart, which looks like it had the potential to go higher, and instead it failed. So just leave these stocks alone. Frog was one that I had mentioned that had the potential to continue. Instead, it broke down as well. As I said on Twitter, it croaked. MGNI, nice little break higher here and then pull back. What it should have done is created a nice little flag and done this. Instead, it continues to break down. We don't buy dips, we buy strength after the dip. Big theme in the book. Same is true with MSM. Big rally. It was consolidating in a little pennant on lighter volume, but it continued to break down. Now it's below declining 5-day moving average. It's going to need time to heal. Same with OI. OLN may be looking a little bit better in that it came down to the 20-day moving average, but it's still going to need to do something like this before it can be purchased next week sometime. Pinterest had a beautiful beautiful base here on the weekly time frame. Let's look at that. Here's our weekly chart. Let's look at it right like this. Beautiful weekly chart. Now maybe it's going to do something like this, but it wasn't able to break out after earnings. The earnings were the catalyst for it to fall back in, and there was no reason to buy it. I mean, there's hundreds of stocks that look like this, and the stocks lead the market, not the other way around. Pizza failed as well, Papa John's. So let's go back to the indices and see how it's affecting those. The Russell 2000, we've got this important prior level of support and resistance. We're right back to that. We're at a rising 20-day moving average, but we're below a declining 5-day moving average here on the right. That tells me I don't want to be a buyer. I'm not going to buy the dip. I'm going to buy strength after the dip. That's the way I always do it. That's the way I think everyone should do it if you like making money. The semiconductors have broken below their 5-day moving average, which is now declining as well. Some further pullback, profit taking in this market, maybe even all the way down to the year-to-date anchored VWAP, would not come as a surprise to me whatsoever. And the biotechs, this has been the strongest group, this XBI, and as I spoke about over and over again. My time frame, what I like to do is swing trade. I thought that when you look at the weekly time frame, it looks like it could be set up for a longer term uptrend, perhaps to go hit the anchored volume weighted average price off the all-time high. But fortunately for me, it's pulling back. I had two trades in it, one right over here, another over in here, got stopped out of it, and it continues to pull back. It's right back down to the breakout point, erased all those gains. It's below the year-to-date anchored volume weighted average price, and with it selling off like this from 92.5 down to 85.5, it just is telling us it's going to need time to heal. So, take your time, be patient. A lot of people have FOMO from, missing out on the early gains in the year. The Bitcoin, if you take a look at the weekly chart of that, I've been talking about the anchored volume weighted average price off the all-time high. One of the strategies in the book is talking about the handoff. Where it last touched that anchored VWAP from the all-time high and got rejected, we start another anchor there. And that's exactly where the Bitcoin has been finding supply here recently. So when we look at the daily time frame, let me just do that. It's kind of funky the way it changes. So you can see it wasn't perfect there, but it never closed above that anchored VWAP from that handoff. And now it looks like it's headed for a test of this, which is the year-to-date anchored volume weighted average price. We bring it down to about 21,000 on Bitcoin. Bottom line on this market is we're undergoing some profit taking after a real strong start to the year. Don't be in a hurry to get into these things while they're pulling back. Let them settle down, see if they are going to settle down or if they're going to continue to go lower, and then buy the emerging strength as it starts to emerge, not once it hits a new high and chase breakouts. Instead, another chapter in my book, don't chase the gap, don't chase the breakout. Wait for things to settle down and reemerge with strength on the shorter term time frame. I promise you, every single person that I've introduced the anchored volume weighted average price to over the last 2 decades has told me it has made a positive impact in their trading and investing. It's not just about day trading or swing trading, it's for investors as well. Have a good weekend and thank you for tuning in.